So, like I said, so today we'll be looking at basic market structure again. So, in basic market structure, there are terminologies you have to look at, and it's going to help you. There are basic terms that if you understand it, they look very simple, but they are very vital, right? If you understand them, it will help you to your trading journey will be very smooth. All right. I wish I know all these things, when I was starting. So first we'll start with basic terms like terms like IRI. For example, you look at price market structure that looks like this. So we're looking like something that last week, the last time we met, I spoke about something that looks like this, right? All right. And I remember I said that this is what we have our what higher low. This is price movement. This is actually how price move. And I remember I said that price doesn't move in a straight direction like this. All right. And we also look at this on the chart, right? I say price doesn't move in a straight direction like this. Price move in a wave-like direction, like so, like price doesn't move like this. This is how price moves. And that's why a lot of people are confused when they look at the market. They don't understand what is going on because they see all these movements that look like a wave. All right. So and that's what market structure will help you to understand. It will help you to understand market trend and how to follow that trend. So you have something that looks like this in an uptrend, and I said this is an uptrend. So in this uptrend, we have what we know as what higher low. Okay. Just pay attention on it's not so difficult, all right. So if you pay attention, you will get it. So we have higher low. So and this higher low, you notice that because we are in an uptrend, price, after price takes out a particular high, which is high, price will come down to another low, to the low below to the first low. All right. Then apart from the higher low, then we have higher high. Okay. So these are actually higher high. Sorry. So okay, let me clone this. So this is another high. This is another high. So, and I remember I said this happened in an uptrend. All right. And you will notice that this price at this point is higher than price at this point. All right. So each time price moves, it forms in an uptrend. Price forms what? A new low, which is known as higher low. So you know that price here is higher than price here. Price here is higher than price here. So we call this higher low, and higher low. So this is an higher high, this is an higher high, and this is an higher high. So what this does for you is that once you spot that market is in an uptrend, it will help you to anticipate what is going to happen. What normally happens in the market is that a lot of trader does not understand what the market is trying to do. Like I mentioned earlier, basic market structure help you to anticipate what price is trying to do. And 95% out of 100%, price will always, in an uptrend, price will always come and create a new low, giving you an opportunity to buy. All right. And I said in this scenario, what you're trying to pay attention to is you are trying to focus on buys. You'll be avoiding sales. Don't worry, as we go deeper into market structure, you understand this concept. All right. So what you're trying to do, you're trying to what? Just buy, because you already know that price is in an uptrend. So you are looking for buying opportunities. All right. Now, the other side is, the bearish structure. All right. Where you have price will do this. Price will do this. Price will do this. All right. So what you have in this instance, you have what? Lower high. All right. You have lower high. So guys, I hope I'm communicating. If you are following me, just let me know. So you have lower high. All right. And you have lower low. Okay. So these are lower lows. These are lower lows. So I'm trying to take it step by step so that you guys understand this concept. It's a very simple concept. Like I said, what it helps you to do is that it helps you to anticipate what price will do. So, and then you notice that after price takes out the initial low, this low, it forms a new low and then goes back towards the previous high to form a new lower high. And then that's how price moves, in a down, in a downtrend or in a bearish structure. So what you have, so this is what you have. You have price coming down. All right. So in this scenario, what you are trying to do in this scenario, on this, I want Chorus answer in the chat box. What are you looking for? What opportunity are you looking for? I need to know you guys are following me. What opportunity you are looking for sell? Thank you, John. What you are trying to do, you are looking for sell. All right. I hope I'm communicating. So you are trying to look for sales. Okay. You are trying to actually look for sell. All right. But as price moves in this wave-like pattern, it will get to a point that it will now create. Let me remove. It will now create what you know as equal high or equal low. All right. So you have something that looks like this, an uptrend. All right. Then it gets to a point where it now creates something that looks like an equal high. And then from that point, it will now take out the previous low, this low, to take out that low. All right. And then create a lower high. All right. And then now create a lower low. And then do this and create a lower low. So at this point, all right, you say the trend has changed. I'm going to show you on the chart now so that you see what I'm saying. So what you will notice at this point is that price moves from an uptrend and changes towards a downtrend. So you have something that looks like this. We are actually in an uptrend. We are moving up. And then we get to the pinnacle and then we start coming down. All right. So let's go to the chart. All right. Before we start talking about, the other parts of market structure, I want to be so let's go to the charts. Let me see, where are the charts? All right. Okay. It's okay. I'm on the 4-hour time frame. So as you can see on this chart, you can see price is trending up to the upside. But you notice that as price is trending to the upside, it's creating a series of higher lows. All right. You have something that looks like this. Price started from here. Series of higher lows, and higher highs. Then we go here and create something that looks like an equal high. And the price starts dropping to the downside. But don't let me confuse you with this combination first. Let's focus on the higher high first. All right. So this is what we have. We have price move from here, creates a higher low. All right. Creates another higher high. That's a higher high. Creates higher low. Creates higher high. Creates another higher low. Creates another higher high. You notice that this high is higher than this high, right? creates another higher high, then comes all the way down to create a low that is lower than this. Is create something that looks like is lower than this low. All right, comes here to create an equal, but you notice that even at that, this low that is here is still, this low here is still higher than this low, this two low, this one here, this support. Notice that both of them are still higher than this low. All right, this is how price move in an uptrend. Now, for a smart trader that already understand basic, just you understand basic market structure and price action, you can even trade. So for a smart trader that understand basic market structure, already knows that each time price, you notice that each time price takes out a high, it comes and creates a new low, giving you an opportunity to follow price, as you can see. So this gives you an opportunity to, that's why there was a screenshot I posted in the group last week, I think on Thursday and Friday. You will notice that I did some stack up. You know, some people will be asking you, how do you stack up positions? Probably, let's say you take pound JPY, for example, and you are buying or you are selling. You have like 3 selling positions. So if you wonder how are you able to enter sell at a particular price, then you enter sell again, you enter sell. You now have like 4 positions, sell. The thing is, it's just understanding market structure, because you already understand that price takes out this high. Each time price takes out a high, it comes and creates another low. For example, price take out this high, this one here. It takes it out. Yeah. And as soon as it takes this high, then it comes and form a low. All right, I hope I'm communicating. So let's go back to that illustration. So this is what you always have. Price do this, then it will come back to this low. Come back to this low to create a new low, but that is higher than this low. I hope I'm communicating. And then move on. And then do this. And then do this. All right. So now for a smart trader that understands market structure, each time you see price take out the previous high, all right, with your understanding of price action, we already talked about price action. If you are not here, go and watch the video again. You see it on the group. So what you're trying to do for a smart trader that already sees that price has taken out this position, this high, already he knows that price will come back and create a new low. All right. And then as soon as price take out this high, it comes back and creates another low. So you know, this the knowledge of market structure teaches you patience. It teaches you to be patient, because you are anticipating what price will do, because you already know what price is going to do. All right. So that's the beauty of understanding market structure. It looks very simple, it looks very basic, but it is very effective. It is not complicated. Don't complicate. Trading is not complicated. Don't just complicate it. Just understand basic things and follow through. A lot of people like to complicate trading. It is not that complicated. All right. So now, last week, we spoke about 3 types of market structure. But before I do that, how do you know when a trend is about to change? For example, you have a trend, a structure that looks like this. A structure that looks like this. A structure that looks like this is not a very good structure. This type of structure. So you want to stay out of the market if you have something that looks like this, because you don't know what price wants to do. But when you have something that looks like this, so you're already anticipating that, okay, we are in an uptrend. Or you have something that looks like this. That's why you see trader, they will say, the market is not trending this week. Or market did not trend. I didn't see any trading opportunity, because this is what price is doing. No high was taken out, and no low was taken out. Price is just moving. Price is just moving, in an irregular manner. All right. So you don't know what price wants to do. So I haven't said that. So last week, I remember I said that when you have something that looks like this, that is when you like something that looks like this. That's when you can also say, okay, price has broken this high, or price has taken away this high, or let's say price has broken structure to the upside. Then you can now say we are bullish. Just like I showed you earlier. So you have something that looks like this. So we have 1, and then we have 2. So last week, I remember I said we have 3 types of market structure, or basic market structure. We have the swing structure. Let me write it out so that for people that. So we have swing structure. Substructure. And we now have minor structure. So I'm going to be showing you that in the chart so that you see what I'm saying. So don't let all this big grammar confuse you. These are just words to just they're just nomenclature. You see everything in the chart now. So, and I said, when you have price, take out a I, like for take out this I, and you have something that looks like this. You have something that looks like this. So that's this place to this place. All right. Let me do okay. Then I said that from this place, you have something that now looks like this. Something that looks like this. I remember I said from this, okay, I think I labeled it for easy understanding. So we have this our A. Let me see, I want to clone this. For easy understanding, okay? So this is our B. All right, so this is our ABC. So I now said from this port to this port is your swing structure. From this port to this, from A to C is your swing structure. From here to here, that's your swing structure. All right. So price creates a higher low. This is a higher low. Creates a higher low in an uptrend, and now creates a new high after taking out this high. So from here to here is your swing structure. Now, what swing structure helps you to determine is that it helps you to. Now you are now waiting for price to do a pullback. Price will now do this, something that looks like this, and then continue to the upside. So you are waiting for price to pull back to this zone. We are not trying to buy here. We are trying to wait for price to come in towards B. Don't forget my explanation on price doing this. It will come toward this low before it continues the trend. So you are waiting for price. So let's say you are with your friend that doesn't understand market structure. So this thing is going up. The guy will place a buy here. But you that you understand market structure, basically, you just tell the guy, wait, it's a trap. Don't buy here yet. Price is going to come down because you already know. You are anticipating price to come towards B. So you tell the guy, if you jump in, you are going to have a lot of drawdown. Just wait. You tell him, wait. You now say, I say, wait. So, someone that understands basic market structure will wait for price to come towards B before you take a buy. So now swing structure tells you that when you have a break of structure like this and you form a new high, wait for price. Wait for price to come towards B before you take your buy. That way, even if price does, we are going to see it in the chart now. I'll be showing you so that you see what I'm saying. So what that tells you is that you are now focusing your attention. You are focusing all your attention in this zone. You are not looking at the lower zone because you already know that price has broken structure. So you are focusing all your attention in this zone. You are waiting for price to come down before you take your buy. I hope I'm communicating. If I'm communicating, let me know, please. If you don't understand this concept, if you don't understand this simple concept, let me know. Maybe, oh, okay, I'm communicating, right? All right, so the same thing for downtrend. If you are in a bearish, if you have a bearish structure that looks like this, price takes out this high and come and form, takes out this low. All right, and do this and do this. This one is 2-step. So basically, what you see, that price has formed a high here. Price. All right. Then we have another high here. We have a lower low. So price has formed a lower high, then a lower low, another lower low. So this is your, let's label it like the way we label the other one. Or we go to the charts. So you guys are going to be out. I'll show you how you are going to be doing this in an assignment so that it's going to stick. And you're going to try it as much as possible. All right. So now you have your A. This is your A. Price has already created a I. Right? Now we printed another B too, and this is your C. So from year to year is your swing structure. So now you are now focusing your attention as a smart trader that already understand basic market structure. You are focusing your attention on this zone. All right. So you are waiting for price to do this. You are waiting now. You are now waiting for price to do this, to come towards B and then sell off before you take your sell. All right. So you are waiting for price to come towards B. Why a trader that does not understand what price is, you jump it. That price has broken now. There's a breakout. I remember they used to call them back in the days, they call them breakout traders, and they are still breakout traders today anyway. They say I'm a breakout trader. You notice that as a breakout trader, if you trade breakouts, your stop loss has to be very wild. You have to have a very wide stop loss, because most times when price break out, for example, this is a breakout, most time price always pull back. Not every time, but 95% of the time, you always have something that looks like this. We'll go and check it in the chart now. So you are waiting for price to come towards B before you sell. All right, let's check in the chart in a minute. All right, give me a minute. Let me clear. All right, so all right. Let me remove all this drawing stuff. All right. So for example, now we have price do this. We have price do this. Price move up and took out, broke structure around there. All right. Price broke structure, took out this I. There's an I here that price took out. This one. Pardon me. Let me do that again. So price came all the way up, took out this I, and wait here. All right. And there's a pullback. All right. Did this. All right. If you pay attention, you notice that this is our swing structure. Price has already created a swing structure for you like this. Price has already created a swing structure for you. So if we cut out, where's that thing? So now if I cut out this after price created this swing structure, see, this is a swing structure. If I play this, So you see what price has done. You will notice that this A was not taken out. This A here, there's a here that wasn't taken out. Before, you notice that before that uptrend continues. I think after basic market structure, before we go to advanced market structure, I'll be talking about protected low and protected high, strong low and strong high. All right. So you notice that. So you notice that price printed, this swing structure. And before we continue, let me quickly. There's something I was supposed to mention. I forgot. I was supposed to quickly. So most times when price do this and creates a swing structure, price creates a swing structure. Please follow me. It's not something that is difficult. So when price creates a swing structure, the pullback, I forgot to mention the other ones I mentioned earlier. So the pullbacks that you have, these pullbacks that you have, this one that comes back and then before price continue, this pullback, this retracement is known as your substructure. This retracement is known as your substructure. And the continuation of the trend to the upside or to the downside is known as your minor structure. So this is your minor structure. All right. So this is your, now from year to year, don't forget from your A to your C is your swing structure. Now the retracement from C towards B, don't forget we put ABC that time. All right. So the retracement from C towards B is known as your substructure. And then the continuation of that trend to the upside is known as your minor structure. All right, I hope I'm communicating. So now price will also, each time price do this, it will create, give me a minute. I don't know why this is not. Okay, let me remove. So we have something that looks like this. I hope I'm communicating. It's not that complicated anyway. Just 1, 2. So we have our swing structure. All right. And then when price comes back in, it will print another swing structure. Now this is, you see that this is 1. And this. So now you now have another swing structure within this swing structure. Pay attention. No? So this place that price creates a higher low before taking out this high from year to year now becomes your new swing structure. This from here to this point now becomes your new swing structure. So now you are now focusing your attention on this zone. This is in an uptrend though. All right. So you are focusing your attention on this zone. You are waiting for price to do this again. The same thing. It's the same thing. Every time it's the same thing. You are waiting for price to do this before price continue. Let me show you that in the chart. Give me a minute. Let's go to the chart. So so from here, let me see if I can condense this thing so that it look to make sense. All right, so pay attention. So from here to here, this is our swing structure. We have price took out this high. There's a high here. Took out this high and went on the way up and created a new what? Created a swing structure. All right. All right. So price, let me adjust this so that you see what I'm saying properly. Give me 1 minute. Okay, cool. So from this zone to this zone becomes what? Our swing structure. And price, you notice that price did what? Pull back. Guys, I hope you are seeing my screen. Pull back. Creates, let me increase this for proper explanation. So we have price create this swing structure. This is the first swing structure. And the price comes down and creates what? There's another one here. From this support, if we, you notice that at the end of the day, this I here was eventually taken out. This I, there's an I here. Like I always say, if you have listened to me enough, price is continuum. Price has a continuation. So if price has printed a higher I, you still have to look out for that I eventually. This I now becomes a resistance. You see that price came here, still came back here to create another higher I at this point. I hope I'm communicating. Okay, let's look for a bearish scenario. This thing is very simple, please. I don't want it to look too complicated. Let's look for okay, this is actually a bearish scenario. I'm communicating. If you don't understand anything, just note it down when we get to the question and answer. Okay, so yeah, right away, yeah, if you can see my screen, we have something that looks like this. We already have price printed a high. And then you notice that price took out this low. All right, to create another new low here, and then create a lower high, which is lower than this high. Created a lower high and took out this high. Sorry, took out this low again. So from year to year becomes your swing structure. From this A, so this is your A, this is your B, and this is your C. Let me label it for easy. So this become your A. Just pay attention, no? And this become your B. This become your B. And this become your C. This become your C. This become your C because price actually moves in here. But eventually, price did what? Moved in, took out this C, but eventually it moved in towards this B. All right. So now from here, from this spot to this spot now becomes your, guys, I hope you are following me. Don't worry, as you begin to look at your chart, you begin to see all these things. The first of all took out this C. Let me draw this again. So this is what we have. We have A, this is our A. A took out this, printed B, came all the way here. Let's name this place our C. Oh yeah, this place is supposed to be our C. And went back to what? Towards B. All right. Don't forget market structure. We say price will move towards B. All right. So this is our C. Sorry. This is supposed to be our C. All right. Before the trend continues to the downside. And each time it creates a new swing structure and it keeps pushing down, Now this spot to this spot now becomes what? Our new swing structure. This spot from here. So you'll see, and this spot, you notice that this place is protected. We are going to be talking about protected high and protected low. So now, if you understand basic market structure, you are not thinking that price will come back here. You are not saying, what if price? You see this thing is going up. You are not saying, what if price comes back here? Because you already know that this place has been taken out. Right? I hope I'm communicating. So what you're going to be doing for me going forward, I think I already have that thing drawn out. Where did I even, give me 1 minute. Okay. So I need you to go to your chart. This is the assignment I'll be giving you probably on a 1 hour time frame. Because 1 hour time frame can be stubborn. You can even do it on 4 hour time frame to label your structure like this. The way I label it. The way I labeled it like this. You go to your chart and then you look for your higher low, your higher low, your higher high, and then your swing structure, your substructure, and your minor structure. All right. I want you to go and do that in your this is the assignment. You drop the assignment in the Telegram group. All right. So if you have any question, let me know. The more you practice, the more you understand these basic markets. It's very, very simple. It's not hard. All right. I don't know if you have any question. So that I can address the question before we conclude. You can drop your question in the chat. What exactly is minor structure? Your minor structure is the continuation of the trend. Don't forget I said the minor structure is the continuation. Like, see the way I labeled it in this thing. This is your minor structure. This is your substructure. Your substructure is like the retracement. So from year to year is your swing structure. All right. Somebody, Josh. Okay, Josh. Free Josh. You can. I unmute you. I just unmuted you. All right. You wanted to ask a question?
Yeah, can you hear me?
Yeah, I can hear you.
Please, just a minute. How the assignment is submitting? Because I submitted the first one you gave us. How are we going to have our